All right, what's going on, everyone? This is Jordan with Conquer Trading and Investing. It is Friday. What a wild week it's been. What a wild week it's been. I'm going to take a couple of minutes here, just give everyone a couple of chance to get in here before we get started. We'll get started in just a couple of minutes. All right, let's see what we have going on this morning. So we had a bunch of data with way better than expected non-farm payrolls, except that is not really where the market is focused in at all today. Zero Hedge was calling it this morning the most irrelevant jobs report ever. What is happening in the markets? Markets are down 3% again today. It looks it looks clearly that not only has the market faded the rate cut by the Fed, but that it's really pushing for further rate cuts. Actually, I think it's going beyond that. I think it's pushing not only for further rate cuts, it's pushing for QE for real. As soon as they cut rates this week, I tweeted that out. I said markets are going to look to fade this, and they're going to be pushing to get rates close to zero and for QE for real. There's a lot to talk about today. Today, actually, more than some. Today, I want to talk about the last couple of weeks, some good things that did happen, some good trades that were put on, and then talk about where the room for improvement lied. All right, this is really important. Things that we're going to get into today. Happy Friday, Blair. Some nice trading overnight. Like to see that you were taking advantage of the US dollar, Japanese yen getting pummeled. Pummeled. If anyone has not seen yet, it was pull it up. 2 days ago, I sent out in the newsletter a post about this interview between Anthony Papalono and Raul Pal. It was absolutely. That was yesterday. Absolutely amazing. If you haven't seen that, do go ahead and watch that today. If you're not yet signed up for the daily newsletter, go ahead and do that as well right now. Yeah, we'll talk about everything. We're going to go through the list today. Obviously, people are not looking to position in right now on Friday. So we're going to have Jesse. So we're going to have some time here. All right. So we'll start with the euro, actually, because the euro is just, I honestly thought that this move down from here was sharp and hard. And the move up now has almost been twice as hard and twice as sharp, almost straight up like a rocket, right? It's not often you see moves like this. Look at that. It's almost straight up about, now we're talking about 550 pips. And, where it will stop, I have no idea. Right? It's not normal for markets to move like that, but we're not even clearly close to any type of normalcy in the market conditions we're experiencing right now. The only thing that it's a rocket, right? It's a rocket. The better than jobs numbers is really not factoring in to the dollar right now. It's got bigger fish to fry. There's a lot of momentum here. I tried stepping in front of it. That didn't work out. And now I have no idea where this stabilizes or reverses, or whether or not we keep going up, right? Because if we pull back a second here, this is a possibility. I'm not saying that I have no idea. This is a possibility up here. This would be some this trend line is what has been going back all the way to the crisis, the resistance. So that's the resistance to the upside. I'm not trying to hint at that's where we're headed or anything like that. Um, let's see where we close today. Gold was actually, before we get into the US dollar, Japanese yen, gold was, as you can see, took out the highs from last week, and then was very volatile right now, gold, because it's up in the past 15 minutes about 0.5%. Look at that. So gold is just enormously volatile, as is the markets overall. So what do you make of that? Well, just for the sake of looking at price action over here, this is really good right here. So you could see that gold came in, made a higher high than last week, and then sold off over about 1%. And then when it sold off 1%, it came out here, this support held, and now it's up 0.5%. And it looks like, I wouldn't be surprised if it comes up, challenges the highs again. Silver not yet following, but gold is definitely on the move. So, I mean, that's crazy price action, right? Even if day traders dream right here. All right, let's keep assessing what's going on. I'm kind of what's going on? You got wrecked. Jesse, Alberto, Maria, Keith, Mima, great to see you all. Steve, Khan, we're gonna get into the pound US dollar, the US dollar Japanese yen, and we're gonna go across the board. Markets are down, by the way, 20 minutes into open, 3.5%. All right, let's keep going. Let's go to the easy stuff. Let me start with the easy stuff. Bitcoin, first of all, is not a risk on, risk off asset. It's uncorrelated. You saw that yesterday with the markets down huge. Bitcoin was up. Today the markets are down huge. It is even. Last week when the markets were down huge, Bitcoin was down. It just does its own thing. But right now it is being rejected by this area of resistance so far. As long as it stays above this area right here, this local support at I would say 89.75 is very bullish. And if it stays above here, we'll be testing 94.75 maybe over this weekend. If it drops below, then I think we're coming down. 85 is a possibility, but it'll have to first clear below 88. So Bitcoin continues to look super positive. I got to get it above 94.75 until we start looking bullish again. But Bitcoin, just really important, and why it's so important to have in your portfolio. It is an uncorrelated asset that just works on its own 4-year cycle. All right, so gold is being explosive right now. I want to check. We wanted to check on the US dollar, Japanese yen. So, and this opens up the door to really what I want to talk about. So we'll start here. Jesse and Blair were all over this overnight. If you guys have any level, you guys I think took profits already. You can see down here we're into support. I don't know how big of support that is. Let me step back. Yeah, I think we're just entering an area of support and supply, and we still have about 60 pips to the downside in that area, which price has spiked into before, and that could spike in today. I'm not trying to call a bottom on this or anything. I know the markets are moving. The markets are moving with huge momentum, and it's Friday. So, but what I really want to talk about was going back into last week. when I'm talking about myself personally, because that's going to help all of you. And going back into last week, I was holding the Australian dollar, Swiss franc short, the New Zealand dollar, Swiss franc short, and the New Zealand dollar, Japanese yen short. And I took profits on Monday. Prices really kind of where they are. But if we break down further, which is quite a possibility, I'm going to really be kicking myself, because I was talking to everyone about the importance of right now with these expanded ranges of really looking to be position minded, to be looking to hold positions longer than normal because of the opportunity of these markets moves. And I did it. And I exited my trades on Monday. And actually, it's definitely, it's about 40 pips higher than it is right now, and that's where I exited the trades. And I probably, and the reason I really want to look at this right now is what I should have been doing was looking to add to my positions on retraces, right? And at the top of this consolidation is where I should have been looking to add to my position. And it was a big error. I don't care that it was a fantastic trade, kind of. I made good money on the trade, but it really was a poor trade for me, being so short time frame minded and not really assessing the bigger picture here. I got a little spooked when the Fed spooked me. Powell spooked me with his comments last Friday, and being accommodative. And then when the Fed cut, that also spooked me a little. And it's really important for me to again, it doesn't matter that the trade wound up being very profitable. What matters is that it really wasn't managed to the best of my ability. And it appears to me the current situation we in is not even close to being resolved. There's going to be a lot more opportunity. I really think that everyone needs to really focus in on in trying to ride these waves to their fullest. All right, Harsha, we'll start there on WTI. Martine, Blair, Sunset, great to have you here. Really, really, thank you for introducing yourself, taking the time to introduce yourself. And we're happy that you're here and look forward to working with you and sharing a lot with you. We'll get to, we'll check out WTI first, which we know is weak. Not only that, it's taken out this area right over here, this last low. It's trading below it. We talked about, and again in the newsletter, we've been talking about the need to watch China. It's very difficult to watch China right now because it seems to me, my impression is that what they're doing is kind of faking a recovery. And I would really be interested to have a better inkling of what is going on inside China. We're obviously, everyone is watching certain things like the electricity, but we know that they're running empty factories just because people are watching the electricity, the traffic, people are watching through the GPS. It's hard to get a good read of what's happening with the coronavirus inside of China, because clearly the play is to limit the knowledge getting out. And I mean, it is quite possible that China did contain the virus, and that actually the rest of the world is actually going to be suffering over the next months of an increased rate infection of the virus, and that China is actually going to recover, right? That's one possibility. The other possibility is they're completely lying and things are going to get much worse over there. I have no idea which one it is. Either way, it's plain and simple. There's much less demand for oil. We obviously, no one is shorting oil down here. We don't take breakouts like that. Let's see, just give it time. Same thing, no matter what you're looking at, US dollar, Japanese yen, great example. It's come very far, very fast. Obviously, if you're short time frame minded, you could take pips from it, especially with markets moving like this. Absolutely. But if you're looking to swing trade, you got to wait now. You got to wait, right? Because nothing is straight up and nothing is straight down. And the euro is an example of that because right now it's straight up, right? It looked like it was straight down over here. And now it's straight up, coming here, making highs of the session again. And it's not going to continue like that. If you are looking to get long on the euro, there are going to be pullbacks. Wait for those pullbacks. Um, and to be honest, not that I'm looking to get long the euro here right now either, because this is not normal, and it's not easy to read, and it's not easy to trade. For me, people who are long the euro, of course, they're doing amazing, and rightfully so. But I don't know, it's the yields on U.S. Treasuries are getting wasted, and this is obviously affecting flows. And you're seeing the Japanese yen and the euro both appreciate strongly on this right now. Listen, I'm surprised we're not seeing a stronger dollar here in the current market dynamics. And you know, I believe strongly we're going to see a stronger dollar, especially as things get funky here, and the current situation could very rapidly deteriorate further. We could start seeing we could start seeing this turn into an actual crisis, and where that will be, whether or not it'll be in corporate debt, whether or not it'll become a sovereign debt crisis, or whatever the case may be, there will be, in any type of liquidity crisis, a run to the dollar, and it'll happen very rapidly and very quickly. And that's not what's happening right now, though, right? Right. That's right. I mean, what an analogy, though. And that's the truth for all of us. That really we talked about that yesterday in the newsletter. That we always need to be looking to really improve. And I talked about things that we could look on first, but we really need that mindset. Really need that competitive mindset. And you know, good trades are good trades, bad trades are bad trades. But either way, we want to be learning from them, and we always want to be polishing our craft 100%. Markets down about 10 minutes to the open, 3.8%. We're seeing the Dow down almost 1,000 points yesterday, and again in pre-market, it looks like it's down another 900 points. This is, I think, the most appropriate word is crazy skates. And I have to be honest, I'm really, it's really, I understand the outflows of the US dollar into the euro and the Japanese yen because of the yields. But at the same time, this is becoming borderline sketchy. And I'm surprised we're not seeing a return of flows. So I don't have any type of insight for anybody on where this might stop until we get to here, right? And again, I don't think we're going to trade up to there, but up there, I would be I would absolutely take another stab at it at those levels. Um, Japanese yen too. I saw a worrisome call yesterday. Banks now calling for 95 on the US dollar, Japanese yen. And the reason I say worrisome, because once you start seeing banks make calls like that, that usually means that they're trying to get out of their positions. You did see that on the euro US dollar when we were trading down here at 107, 108, and banks were all of a sudden calling for 104, right? And then you saw the huge move up. So now they're calling for 95. Is am I saying that you should you fade this? Absolutely not. This is a falling knife. Don't pick up falling knives ever. Um, You got wrecked. Let's take a look. Let's take a look at the monthly on the S&P. Peter, what's going on? Yeah. Yeah, it looks to me like we're challenging the low of last month, right? And we all have, I pointed out kind of early that new correlation between the U.S. equity markets, the S&P and the euro, and it's alive and well in play. And I have a feeling that the Fed is actually not looking to cut at this upcoming meeting. The market is pricing in, I believe, a half percent, 50 basis point cut again, and I don't think the Fed is looking to cut. So that could go either way, right? If the Fed doesn't cut or only cuts a quarter, the market could then want more and push much harder to get the Fed to cut further. Or the markets could say, okay, the Fed obviously doesn't think this is as bad as we do, and the markets could rally. But the next catalyst is not until, was it Wednesday the 18th? That's still 10 days away. That's the next big catalyst that I see. We have the ECB meeting next week on Thursday, and I'm not sure what they could do. There's not much they could do. Right? Is anyone expecting the ECB to come out with any type of action? They've been actually pretty quiet throughout all of this. Um, I assume they're not happy about the euro appreciating. Here we go. We got about 5 minutes to the markets open, and everything looks really dicey. So really, what I wanted to focus on, all of you today, and well, a couple of things. We didn't really get into it yet, but I really want to throw it out there for all of you to reflect on yourself, on the trades that you took this past week. Did you exit your trades too soon? The winning trades that you took, did you exit too soon? How much money did you leave on the table? And were you getting a good read of the markets? Right? I feel like I failed. I definitely feel like I failed in managing my trades well. I feel like I gave up too early on them because it was well into profit, and I wanted it to protect those profits and take those profits. Where if I would have really just detached myself a little bit and been looking at the overall situation, right? We haven't even gotten to my part of the thesis where the cases inside the US start increasing because they actually start testing, and the risk off that brings, right? So I really feel like I just feel like it was very poor management, and I see why I made the mistakes. I see why Powell, did what he's supposed to do and actually shuck me out of my trades. And just ask yourself, though, honestly, could you have held your trades longer to actually maximize the profits under these market conditions better? I think it's really, really important. Um, often a lot of us are very, very short time frame minded, and it's actually easier. It's actually much easier being long time frame minded. Even coming here on the US dollar Japanese yen, I was not looking to take the short here. We knew that once 109, or I was pointing out, once 109.71 broke, that this would have been a failed breakout, and we were looking for much further downside. But if you really honestly think about it, there was no reason to exit this trade until we came back above that, until we traded back above 109.71 to the upside, right? Or until we hit some profit targets that we're really interested in. or until the Fed started QE. Oh yeah, Billy Boy. Well, I say I could say on the Euro US dollar because I took some stabs at it over here and over here in this area that I was wrong on this trade, and it didn't. Well, here was the opportunity. What was this? This was on Wednesday, I believe, right? And when we made the same low, we didn't. This was a double bottom here, right? That was the opportunity to break lower. It didn't happen. I was dead wrong. Am I looking for the euro to continue to go higher here? I'm not. No, there's no way I'm chasing after this overbought market. And look, how long has this market been overbought? For a couple hundred pips now, it's been overbought. And that's not to say overbought can't remain overbought for an extended period of time, but I'm looking how sharp this rise is, right? And sure, we could keep going, but again, I remain a dollar bull, especially in a crisis. Where should I be? No. Is this also a failed breakout over here? It could very well be now. So let's assess this. I always want to know where I'm wrong. All right. And I've always said, below 95 is where at that point that I would definitely be getting bearish. But this looks pretty bad. I'm not going to lie. This looks more than bad. That's you got wrecked. I'm so worried about what you just the insight you just shared about chasing an extended move because they can reverse super quickly, right? Like for example on gold this morning, because I mean gold has since retraced that move, but this is a 1% drop, right? It was up that high. Look how quickly it dropped 1%, and it's since retraced it. But point being, as you got wrecked, it was talking about is that the fear here is chasing these moves right now because they can reverse so quickly, and and the other thing that really we need to just really focus in on here is really knowing when you have to push your trades, right? You really have to know when you have to push your trades. And we've been in an environment all year now, past 3.5 months, where we're seeing ranges expand. And right now we're at the height of that volatility this week. They keep expanding. So, when you get in a good trade, if you're normally looking for 15 pips, you now should be looking right for 25, 30 pips, right? As the ranges have expanded. Here we come now in the opening. Let's see what happens here. The first 15, 20 minutes are going to be really important today because the markets are down 3%, right? Jesper, what's going on? Um, Look at this. Swiss franc continues. Swiss franc is actually outperforming the Japanese yen a little bit during this whole week. And again, just to talk about my errors, I really want to focus in them. I was holding this trade from I don't know, pretty high. Um, and I exited down here. I exited this trade on Friday once Powell made his comments, right? And what I should have done was I should have added to this position somewhere in this area. So in this move, talk about a carry trade falling apart. So economic reset for the that's such a a complex question, right? So I think it's fair to say that you know so let me begin to answer that question by talking about are we in the end of times, right? Do I believe that Jesus is going to return soon and the end? You know, why I do not believe we are close to the end of times. We are as closest as we ever been in history towards the end of times, and why I do not believe we are anywhere close to a immediate reset. We are closer than we've ever been in the process to a reset, right? Meaning, I don't think that is happening anytime soon. In order for a reset to happen, things will have to be really, really, really bad. And I don't know whether or not that means, you know, a depression or some type of like hot war. Before there's any type of reset, because right now you have China, you have Russia, positioning themselves for the future. They're doing this by obviously accumulating hard assets. They're doing this by accumulating gold, and they're doing this by divesting themselves of U.S. treasuries. And then you have the U.S. who's trying to milk the current situation for as long as possible and get as much out of holding the reserve currency card. And you obviously still see the U.S. military as the move of choice in order to protect that reserve currency. You see that being played out in the Middle East. Why I do have a pretty clear idea of what that reset is going to look like, and I do believe it'll come down. You could see clearly that the Federal Reserve is trying their hardest to preserve the current status quo, right? But you could tell that they want for this to continue as long as possible. What I believe will happen is when the next crisis hits, that you're going to see the IMF come out and they're going to introduce their central bank digital currency. They're going to introduce this backed by their SDRs. They're going to try to make this the world reserve currency. And what this will be instituting will be the worst possible situation for humanity possible. Zero privacy, the opening up the door for a complete totalitarian system of governance. And I think that I think when this happens, that the Federal Reserve and the United States is going to become almost Lehman Brothers was the one sacrificed last time. This time, I think it'll be the United States and the Federal Reserve sacrificed. Now you're going to have the United States doing everything in their power to fight that. So don't underestimate the ingenuity, the creativity, and the fortitude of the people of the United States at all. So I think I think you have a lot of powers battling out and fighting for supremacy, and I don't think it's something that's going to happen anytime soon. I think that the powers that be are going to try to hold on to power for as long as possible. Let's take a look at it, Gabe. So I'm assuming the markets on the opening have rallied, which is the case. Beautiful trade. So Gabe, I mean, this is a clear example. A beautiful trade, actually. Even taking profits down here as price started consolidating. Um, Amazing. Jesse, I think that, well, the Bitcoin is the wild card. I think that in a situation where, if the central banks, when they introduce their digital currency, Bitcoin is at that point really the only vote for freedom, right? Uh, and there will be an enormous Bitcoin. There is the absolute chance that Bitcoin is able to become the actual there is an absolute chance that Bitcoin is able to become the world's currency. But if I could give the odds of that happening, they're still extraordinarily low right now. I do think it's entirely possible over the next 18 months. It is possible that the market cap of Bitcoin overtakes that of gold. That's a possibility, or it comes really close to it. Bitcoin would have to be trading at about $385,000 to do that. But then again, if gold's trading higher than it is now, it won't be able to do that. So, but I think it's really important to realize in 2 months they're both almost as scarce. Gold is a little bit more scarce than Bitcoin, tiny fraction. But so it would make sense if Bitcoin did not overtake the market cap of gold and only came closer or close. And then, 4 years later, when Bitcoin is more scarce than gold, it surpasses it. And at that point, Bitcoin will be competing for actually a large portion of the overall supply of money against the dollar and or any other dominant currency. However, what happens between, that's 4 years from now is a long time, or actually, 5.5 years from now is a long time under the current situation. Is there the possibility that the central banks, they're easing, that we get if we have to get close to zero, if we institute QE, that the coronavirus actually doesn't wind up, getting as bad as it looks like it's going to become, and that all of a sudden 6 months from now we're seeing a recovery? That's possible, right? And if that does happen, then this whole current system is going to continue for a long time. And they're trying their hardest to continue the status quo as long as possible. Now, you do have other central banks. Mark Carney, before leaving the Bank of England, said, listen, this whole situation with the US dollar as the world reserve currency is no longer working. We need to come up with an alternative. And as the dollar comes off right now, that's less of a problem. The problem is when the dollar is trading at highs, right? But right now, this has become less of a problem, right? Dollar starts trading towards its highs or breaks out past 100, then that becomes a problem. You going long, the Canadian dollar down 0.9%, took out that low over here, trading below it, going long over here. That's uber counter trend. That's about as counter trend as you could get. Let's look at what time frame are you trading? If you are trading something like the 30-minute, right? You need to wait for some. I mean, you're trading just off the lows of the day. All right. Let me pull that up. Anyway, we can watch it. I guess it's a medium impact news event. I think the Canadian, I don't even see it, Blair. All right. Markets are actually holding the lows of the day since they opened. They're pretty much trading at the lows, overnight lows. Is this an area of support over here? Barely, you know. Let's say what they do. It's Friday. Yeah, obviously they don't want to go into the weekend with Main Street America looking at headlines of the markets down 1,000 points again. 3%. Dow losing 800 points. Let's see if they work their magic. Wouldn't be surprised, obviously. So perhaps fading these type of moves, you know, might work out, but I'm not an advocate of it. Yeah, I was wondering, man. I know that I wanted to check in on that U.S. dollar Swiss franc trade that you were all over. Or when did you get out of it? Are you still in it? You really saw that coming. And when I was looking at that chart earlier, I was just thinking how impressive that trade was. Did you get out of the trade? Are you still in it? There's no way. I obviously wish I would have actually held my. I thought I was a hero, positioning in longs over here and then unloading them over here. You know, this move personally, I did not foresee coming. I actually thought this was an excellent area into the supply over here to fade this, and obviously I was proven wrong on that one. All right, so I mean, it's Friday. We're trading at the lows of the week. Swiss franc, Japanese yen have been just so strong, and the dollar so weak. The dollar has obviously been the weakest. Uh, so since I mean, what was I getting at? Well, it is Friday going into the weekend. What do we expect to happen over the weekend? Usually we see risk off coming into the weekend. It's been 5 weeks in a row of seeing that risk off coming into the weekend. Perhaps I believe we saw in the last 15 minutes of last Friday the U.S. equity markets trade up enormously. I forget the exact amount, but they did trade up enormously. Are we going to see that happen again? Quite possibly. 1, 2, 3, 4, 5. This was Friday of last week, and I think most of that happened in the last 15 minutes, maybe a half hour. Are we going to see something like that happen again today? I wouldn't bet against it, but again, we normally have, and watch what FX does, because FX normally doesn't get faked out. And so I'm watching the Swiss franc. I'm watching the Japanese yen. I want to see what they do going into the weekend. Um, by the way, so nice share over here inside our a Telegram group about the possibility. I just want to stepping out here, talk about it with y'all. Let me share the link first. So I didn't get a chance. Obviously, I will read it after the live stream. So they're talking about the possibility of the coronavirus actually being a U.S. biological weapon. You just give my limited understanding that I, that I believe. Obviously, I don't talk about things that I don't know. I wouldn't share. But from my understanding, this strain of coronavirus did come from a U.S. weapons lab in what I believe. So I believe it's South Carolina. They know the exact lab it came from, but I do believe that the Chinese actually were the ones who got the virus from that lab. I believe that you know the possibility exists that man, this is so tough, right? You have to look at what this thing has been designed to do. I sincerely don't believe this thing was a fluke of nature. I believe that it was designed in a lab. Bill Gates talked about the greatest threat being a strain of the coronavirus actually designed in a lab being released. This thing is designed to take out people of a certain demographic, an older demographic. You know, if you look at what's going on inside China, they're having a huge problem with their demographics, right? They have an aging population because of the policy of the one child left behind. It's going to be weighing on the Chinese overall going forward. And it's not just the Chinese. The U.S. actually doesn't have the same problem. We actually have growth in births right now. Chinese are negative. I do believe the strain originally came from the U.S., but I don't know that the U.S. used this as a weapon against Iran and China. I'm open to that if that's what happens. If someone could prove that beyond speculation, but that's not where I'm leaning right now. U.S. equities are at the low of the day. Yen is just stabilizing again. Look at these moves. I really wish that I was holding pretty my trades. By the way, I haven't looked at this one. Ever since we came out to this resistance, you could see why we don't buy into the support and we wait for the resumption up, because you could see that the trade never triggered. Over here was the first opportunity to look for price holding this support. It never made a higher high than the previous price bar. Then off of this support over here, it never happened. So this trade never triggered. Now you're coming back down and testing down over here again. And it's just, to me, back inside the blue box. We have two failed breakouts now. If we break out to the downside, that opens up an opportunity at that point to look to get long the New Zealand dollar versus the Australian dollar. But this is a clear example of why we wait for price to confirm the entry always, because if it doesn't happen, it keeps you out of a bad trade. Jesse, that well articulated. That's the impression that I'm under. And I didn't even want to say that I was hesitating. I didn't want to say that the Chinese paid for it. But this is the exact situation that I am under the impression of. Thank you, Jesse. This was 6.6%. this is how hard trading is. First of all, DJ, this is where you jumped into oil somewhere in this area. And at that time, I never ever in a million years would have expected the last 2 months to have played out as they did. You know, who would have known that a virus would be released upon the world, created in a lab? But we were talking about $30 oil up here, right? Doesn't seem so crazy right now, does it? The bloodbath continues. This must be boding well for the Canadian dollar. I also gave up my US dollar Canadian dollar trade, right? This is also, again, I took the long over here and I sold it over here. Seems like a nice trade, and it is a nice trade, but I don't, right? I should have been leaning into this support over here. I should have been leaning off of support to continue. The US dollar is absolutely having its way with the Canadian dollar, while the DXY is getting crushed. So it seems like, you know, my 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 best trades over the last 2 weeks have also been at the same time my worst as far as managing them, because I should still be involved in them. That there it is, Heath. My issue that I'm trying to, by talking about this with you all, I'm really trying to work this out in myself, seeing the type of environment that we're in, seeing these ranges continue to expand, and I wanted to keep those profits, because they were nice sized profits. I wanted to keep them, but I genuinely think that having that larger time frame minded expectations in this type of environment, it could definitely be a lot more profitable. And at the same time, again, it was brought up the fact that, under these type of conditions, these moves could retrace just as quick. So it is trading. There's nothing easy about it. You know, So, but nevertheless, this was a classic case of, listen, in uptrends, and this is a clear uptrend. It became clear to us after the trend line was broken, from here on, and this was a pullback into support. In uptrends, buy off support. In uptrends, buy off support. Plain and simple, right? We haven't really got any, going back to US dollar Japanese yen. This has just been a waterfall, right? We did talk about over here that this was just consolidating. We saw retraces this day on the Australian dollar and on the euro, and we noticed that the Swiss franc and Japanese yen were consolidating. And we talked about, in the newsletter I shared, that's a sign that there's probably the possibility of another leg down, because they were consolidating while we saw other currencies retracing. And you know, had I been a better trader, I would have been all over that. Crazy days ahead of us. Crazy days. So, I mean, this all puts me in a very difficult situation, and there's two other things I wanted to talk about, definitely. But this puts me in a hard situation right now, because I'm not going to fade these things, even though I know that the possibility exists. The moves could be sharp the other way as well. I'm simply not going to fade them out of discipline, and that puts me in a position of really having to wait. Of course, as I get ready later in the afternoon to set the plan ahead for next week, I'll get a better look at things. I'm and then I'll be able to kind of, formulate a plan going forward to get myself into some trades next week. But right now, moves have gone very far. I'm not chasing them, even though they could go further, and I'm not fading them. But so that puts me in a position right now of just having to, coming in flat and reassessing everything. Um, you know, Similar to my and I look at again, I look at this as it was a great trades, New Zealand dollar, Japanese yen, you know, great trade, New Zealand dollar, Swiss franc, but could have been managed so much better. I wanted to talk about Raul Pal, who was, this guy has been the trade of his lifetime. He called out. I hope you guys are familiar with him. I shared the video in the newsletter where he was talking to Anthony Papalano. It was a fantastic interview, worth everybody's time. If you still haven't checked it out, please do watch it. Um, and he's been talking about for months now on Twitter, on Real Vision, about this particular trade. And the trade of his lifetime. And bond yields move up. They moved up so far the day before the Fed cut rates, and he took profits on his trade. He said, "You know what? This trade has moved so far into profit. I'm taking profits." And since he took profits, the trade has basically collapsed in what would have been his favor. Trade of his lifetime, and he could have managed it. It already was the trade of his lifetime. He could have managed it so much better. And he is showing the fortitude saying, you know what? I'm not going to chase it. I'm going to wait because there is going to be a pullback. There's going to be a sharp correction. And that's going to be the time to re-enter my position. And that's really the type of mentality, the mindset that is just needed right here on all of these Swiss franc, Japanese yen moves. If you believe they're going to continue, if you believe that they're going to continue and you want to get involved with them, yeah, okay. You have to wait for that pullback, even if it means they extend further. At one point or another, there's going to be a sharp pullback in them. It's a question of waiting for that pullback and then getting back in towards those trends. Um, you guys are Nima and Heath are talking about two of the same pairs, more or less. Let's take a look at them. Interesting. I didn't know that we came all the way up into this area of resistance right now. See, this is patience being shown. And so the one difficult piece is that it's Friday. All right. We're seeing the dollar get obliterated. Grid might be providing opportunity. So this is a really strong and good resistance to look at. I think right now, I'm glad you brought this up because I am interested here. What I need to do is just focus in on the chart and just play my game. So that means if price is rejected by this resistance and I start making lower lows during my preference of time, I'm taking the short here. As I just showed on the Australian dollar, New Zealand dollar, if price keeps rising and the trade doesn't trigger, it'll keep me out of the trade. If I get into the trade and get stopped out, that's okay because my risk reward going into this trade is very good, right? Because the possibility does exist that the dollar does come roaring back. So this looks like an excellent place to look at. Now, the one thing is, it's Friday, right? So this is something that I'm going to be looking going into next week. Now, as far as where's the next resistance above us, extend this line over here. maybe we'll come back and look at this line next week, depending on how price reacts off of this resistance. It is into resistance right now, though, and I want to trade it as accordingly. I don't want to take a position today. This will be something that comes into play on Monday. Good eye. Same exact thing happening here on the Australian dollar, US dollar. Same exact thing. I want to extend this trend line here, though. All right, that's a good area. Yep, both of these trades are coming into a strong resistance. Dollars come off. They both look like an opportunity to reload, and I'm gonna be following both of them and look to enter them accordingly. Accordingly, meaning if we're rejected and price takes me into the trade, take the trade because the risk to reward is fantastic on both these trades. So thank you, Mima Heath, bringing these up. Definitely something of interest. Oof, that's got to be good. That's also Mara. Mara, thank you so much for a reminder about daylight savings time. That is definitely important and should be on all of our minds. I'll definitely emphasize that again later in the newsletter. Appreciate that, and definitely thank you for that. Yep, Heath, I do. I think sell resistance in a downtrend is the play, coming here with good risk to reward. And then you can see over here where my mouse is, this other area of resistance. You got to like how far the dollars come off, getting this opportunity here, which could be an opportunity. But this is a whole big area over here. And so the first area to look at, this is the first resistance we're coming into right here. This is the one I'm going to play off of. Also has that trend line over there, right? If one or two things happen, the outcomes will be the trade is entered and we're stopped out. The other outcome is we keep trading above here without entering the trade, right? Price never takes us into the trade. And then over here, same thing. Here's another resistance we could take a look at. Either we enter the trade, get stopped out, or we never get to enter the trade. And then we have over here, we have to get, if we get above this trend line over here, at that point, then no longer are we in a downtrend. We've now broken out this trend line that we're all aware of. Here was the last time we tried to break out of it. Didn't work out. But if we get back above this resistance and this trend line, at that point, I'm taking a look at longs. But until then, we're in a downtrend. Sell resistance in downtrends. This is becoming a nice opportunity, and definitely the trades of choices. I like them both. They're both 100% textbook. This is where I'm going to be highlighting. No, Martin, actually, we haven't really looked at much because the markets have just gotten so far ahead of themselves. I'm glad now we're seeing some setups over here. Just taking a look around. Yeah, so Euro Australian dollar is trading at near the highs. This was with the Australian dollar making a comeback. The Australian dollar is coming into that area of resistance against the dollar. Euro just remains stronger. What do you do up here? Martin, how are you looking at this trade, right? For me, I'm in no man's land. There's no way I'm looking to buy. If we break out over here, then we could look to reassess. But right up here, and would I look to fade this? There's no way I would look to fade this either. So I don't see a trade here at all. I'm interested though what you're looking at. Sorry, Steve. Are you Steve? What are you looking at? I mean, are you looking to fade this area of resistance over here? Yeah, 100%. I mean, and we're looking at a volatile situation. Obviously, the Australian dollar has, well, yeah, it's mixed. The Australian dollar, right? So I'm seeing the Australian dollar weaker than the New Zealand dollar. I'm seeing obviously weaker than the euro, but weaker than the Japanese yen. And we so yeah, it is a weak currency. You're 100% right. The only thing that is stronger than is the dollar, which is just getting obliterated. So it gave that appearance of possibly being strong. It's not strong. You're right. It's a weak currency. Euro is uber strong right now. So what do you do here? I mean, I don't fade. It could be a double top, and you're into resistance. I don't take the trade. You could take the trade if there's a breakout though, and then you come back and test that broken resistance and continues. I'd be betting on the, you know, on the again. We've been saying the euro over the Australian dollar, but that's not an easy one. I'm looking here over at the U.S. equities, just getting plummeted down 3.2%. S&P looks to be lagging. I mean, the DXY plummeted. Doesn't seem to be near any type of support. I guess right there you have an area of a touch. And the euro is trading up 1% at the highs of the day. Unstoppable. Seemingly unstoppable right now. All right, I'm gonna take a look around. I guess I'm gonna do it on the daily. Actually, I don't want to do that. If anyone brings anything up, I would be happy to look at it. But I prefer kind of as we're in Friday now, to going in with a fresh, clear head to look at my weekly analysis. Look at the euro Swiss franc. I don't know why we didn't get involved over here. Again, that's just poor trading. That's something that should have been looking at. We're interested in. Um, but we are here at the lows, making new lows. We talked about cautioning buying that. A lot of traders wanted to buy that. Whew. So the hard thing about today, I mean, normally we go into the weekend with good reason, risk off. Um, but we're not normally trading down this hard with risk off this early in the morning. So see what happens. I do like a look at both of those New Zealand dollar, US dollar, and Australian dollar, US dollar. They both look like textbook setups, and they're at a point of resistance where they're worth taking a look at now that they've retraced up. I think so. By the way, and going back here, just really quick to look at the euro, Swiss franc. You know, we had this. I had this here on purpose because if price came up into it, that was a level to watch. Price came into it. Um, Point being is just take the setups as they come, because the type of setups that we take have such a good risk reward going into them. Of course, you only need 40% of them to work out, first of all, to be profitable. And if you take them, as they come, it's all you need to do. So back to basics. I really feel like I've seen some good trades coming out of from all of you this past week, and that's all good. I want to focus on where we can improve. Um, I'm not kicking myself. I'm happy if to made money, but I feel like I could have traded much better. And I really want to, I always definitely always want to look to improve. I want all of you to have that same mindset. I really do. And I really wish that right now, all of us were holding on to some good positions right now into this weekend, um, as it was at last Friday. There were no reason to give up in this current environment positions. Although, of course, it's never easy. I talked about Raul Powell getting shaken out of his trade, similarly to the same exact way that I was taken out of my risk off trades. And I'm not trying to say that it's easy, but if you're not reviewing what you're doing all the time, there's zero room for improvement, right? 7%. There's some interesting thoughts from Luke Roman about the fact that oil prices is taking lower is prevents the Chinese from having to devalue the yuan. Really interesting. You would think the lower oil prices make it tough for Tesla overall, but Tesla's still trading up $700. So let's just, I don't know if this is the euro. I do want to, I know it's Friday. Doesn't matter. I want to just keep, I don't want to let these trades get away from me. I'm going to keep watching them. There's no way. So we're into resistance. I take my trades the way I take them. There's no way we're going to make a lower low today than London. Well, not, I shouldn't say there's no way. If we make a lower low on here than London, I'm not taking the trade, right? Because I'm not going to chase it down like that, right? And at that point, the trade will just got away from me. But I'm not going to chase either one of these trades today to the downside. I'm not entering them today, therefore. So I'll be looking at these going into next week. You could see, so the correlation between the S&P and the euro is just, it's so strong. So New Zealand dollar, let's look at it. Let's look at it together. So just to start off, we're looking at the New Zealand dollar, Swiss franc again. Well, doesn't, that's irrelevant. I wish I was still holding my short. There's no reason I should have got out of this short. But let's do this together. Let's first, Alante. Um, Two things. The first thing I'm gonna do is I'm putting in this little line over here of resistance. All right. I got resistance over there. Um, Taking a step back. I don't even see any other closer resistance. So the next thing that I have, and I'm going to put in onto this chart to kind of just like give us some guidelines, is this is the next higher resistance I have over here. I want to see if there's any support nearby, right? So I'm going to go out to the weekly chart, and wow, you could see maybe down over here, I have an area of support. Put it in over there. That's going to be support. I'll turn that one green, and then we'll take a look at what's going on. So right now, price is trading at its lows over here. This is a sharp downtrend, right? You could just see this is the weekly, but this is a downtrend that we're looking at. Let's move over to the daily time frame. All right, we have our area of resistance, right? That's the closest resistance we can find. There's no support nearby. We're kind of in no man's land, right? There's no support nearby. So listen, Alante, we look to in downtrends, and you could see this is a downtrend, right? Like, let me show this to my 4-year-old kid. And is this going up or down? This is going down. This is a downtrend. So we only look to sell in downtrends. All right. This is like, this is going to make your life so much easier. It's human nature to want to sell tops and buy bottoms. That's human nature. All right. But as a trader, that works against you. So the first thing you got to do in your mind is like, I never look to buy bottoms, and I never look to sell tops. Now, investors with a longer time horizon, it's the exact opposite. Like you look to buy depressed assets, right? And you look to sell assets that have appreciated. But traders, right? Or more or less, whether you're a day trader or a swing trader, you're short time frame minded. So you're not looking to buy bottoms, and you're not looking to sell tops. I really sincerely don't recommend buying down here. I'm not this is just, I'm just giving you my input, my advice as purely educational purposes. I'm not trying to tell you where to buy, but I'm in the habit of not buying bottoms, because overall you lose more money than you do like this could pop even today, and you think, man, I should have bought that bottom. No, you should not have bought the bottom, because overall, if you do that, you're going to wind up losing money. What you want to do is just wait until we finally hit an area of resistance, and then sell that resistance. So the first area we're looking at is like maybe next week we trade up into here, and maybe this holds, price rejects, we take the short, and we look to short this thing, right? Or if you get back up in here, this is an area to short, but you're not looking to buy this right now. Swiss franc is the strongest currency of today, of this past week, of these past 2 weeks. And it's because right now there's a lot of risk off in the markets. The coronavirus is really weighing on the global economy. And because of that, a lot of money is going into the Swiss franc. All right. So that's a good look at it. Yeah. So that's all. And that's all we want to get you doing. There you go. So there are other opportunities though, right? Not maybe, and the best, like, don't care if this pops. If this pops up to here, you don't take it because it doesn't work out in the long run, right? It's not a question of like, will this work out or not? It's how do I make money overall? That's where the focus is. And there are some other opportunities in the market. Mima and Heath pointed out both the Australian dollar, US dollar, and the New Zealand dollar, US dollar. And both of those look like, they're offering potential because they're coming into this area of resistance, right? Let me draw something down here that's going to be important on the way down. I don't even see it. I'm trying to add a little support line over here that I'll look to move stops if we get there to break even, see how they react, maybe take profit. But you can see right now, this is a downtrend, and price has come up into an area of resistance. We like to sell resistance in downtrends. This is the resistance. if price starts making lower lows here, that's a opportunity to get short here. This probably for me wouldn't happen until Monday, but it's a trade that I'm really looking forward to. Um, and I'm glad you guys pointed that out. Euro's falling sharply. Equities must be rallying a little bit. So, and anyway, it's so that's, just to reinforce, like what we're looking to do is effective strategies to make money over time. It's never about, like, right now, as this euro started fading, you know, if we take out this area of resistance here, could I short this into this area of support and make, put up some pips here? Probably, but I'm not going to do that because I do what works over time. And I'd rather take 3 trades a week doing what I know works and make money than have, the thrill of putting on a trade that is risky, because that doesn't make money over time. You go through periods where you make a lot of money, and you go through periods where you lose a lot of money, and overall you lose money. So that's not fun, right? And that's where discipline comes into the market. As soon as you find out what works, discipline's a piece of cake. There's no problem whatsoever being disciplined if you find out what works, and you do it all day long. S&P has rallied in the past. You can see that correlation again between the U.S. dollar and the equities. I don't want to sound like a broken record, but it's so apparent. And so far, that support is holding. I don't know how technical that is, or if it's just, we're Friday, and the plunge protection team is in full force, trying to do what they can. Maybe Trump called up Mnuchin, and they're placing some trades in their offshore accounts, trying to get this market up a little bit going into the weekend, so that the president could tout the greatest economy of all time. Right? We're in a crisis, are we not? It appears to be a crisis. Everything is broken. Um, let's see what happens as we come into this local area of now, which is now resistance. Point being, remember what happened last Friday? We're down 2%. Don't put it past us to close green. Look at gold. Gold took out the high, last week's high, did it? High of 1689.30, 1689.93. Took out the high of last week and is now, trading down again 1.2%. Markets are uber volatile right now. This is exactly why we talked about not wanting to chase this to the upside, because these things come down when they get like this just as quick and hard. And just to check in, what oil is doing throughout this big counter trend move, is still down over 7%. Still down over 7%. I was just taking a look around to see if there was any type of catalyst for that 1% move up in equities or not. Again, coming into this area of resistance, I don't see anything. Again, this is so what I'm doing is focus on basics here, and sell resistance and downtrend. This was the big resistance. Came up into the resistance. Look, so just trying to reinforce this into all of our brains. Let's see what happens. Let's see if we take another look at this next week. Let's take a look at it. I mean, it's too soon to say if this is a retrace or a consolidation, but definitely going into next week, the plan is this is our resistance all over up in here, right? So any retrace into the resistance, that's one to watch. That's not even our bigger resistance though. That's our closest resistance. The volatility is insane. You could see here. This is where I had the support, but this is, you could see so far resistance is being rejected. So if we get above this level today, and I'm not saying that we are, this could be, we could challenge the lows just as easy. We could challenge this lows again just as easy. But if we do take about, if we get above this level, at that point, I perceive a pop. That's Friday, 10:30 now, a little after. Want to stay on for a little while longer, but definitely gonna take a moment here, sip some tea, open it up to you guys. Anything particular you guys want to move the conversation towards? Any pair you want to discuss, I'll pull it up. Otherwise, I am just here hanging out with you. Look so far, right into the area of support. So far, it's holding. There's a headline on Zero Hedge right now saying, did Muchin make the call? Stocks, trade up, explode up, and gold trades down. It's kind of funny. This is exactly what we were saying. So this is actually, oh, this is actually, we have some good time here. Let me pull up two things. So right here we have, just as a reminder, because we're getting so close right now, we are about 2 months. We are 2 months of March, April, May. We're 2 months away, probably about 60 days away from the third halving of Bitcoin, right? These are the halving cycles, the 4-year cycles. And I keep talking about Bitcoin is not a risk on, risk off asset. It only trades in its 4-year cycles. That's all Bitcoin is concerned with. You saw last week when the markets plunged down, Bitcoin traded down a little bit. People were like, "See, it's not a risk off asset." And then just yesterday, the markets were off and Bitcoin was up. Yeah, it doesn't matter. It's not a flight to safety at all. It's Bitcoin. You're getting close to starting the next bull phase of Bitcoin. Look what happens in the first, 6 to 18 months after the of a halving period. Look at price appreciates sharply. We're going to be, I believe, firmly trading above $100,000 on Bitcoin by in the next 18 months. You know, probably we should overshoot by a lot. And I'm going to include this article. I read this earlier in the week, and is a really good article talking about the past halving cycles of Bitcoin, and it does go on to talk about, if you use the from the low of the first two halving cycles of Bitcoin to the high during the bull market phase, they had either a 12,000 or a 13,000 percent return. That puts Bitcoin on the low end. If it overshoot, like, Bitcoin should be according to its scarcity at $110,000 after the next halving by around December of 2021. But these things overshoot each time to the upside and the downside, to the upside and the downside. And overshooting to the upside could put us at around $385,000 per Bitcoin. So, we're getting close. I trade my Forex accounts in Bitcoin as the base account for a reason. And just all want to get you all share what I can with you. Yeah, Good food, good people, and discussing trading. That sounds awesome, Alberto. Talking with Blair about possibly next year doing how do you pronounce it, in Acapulco. um the Della Vigilante holds the I can't even pronounce it. Blair, if you're here, please help a brother out. There we go. There it is. There it is. Thank you, Blair. Yeah. So this sounds like an awesome event for us all to get together at. Watching the equities, they're going to come up and take another look at this area of resistance, it looks like. On so many different topics too. I mean, you have everything from libertarian topics, which I love. You have everything on cryptocurrency topics, which I love, and you also have a lot of stuff on health and on 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 body and mind, and really, I mean, phenomenal event. Would really like to get involved in there. It's amazing to see this smackdown in gold. Gold was trading up 1% earlier, is now down over a percent. Look at you could see the DXY. I mean, that's because you're looking at the euro. Basically, it's the same exact pattern you have on the S&P. Here we go. Looks like we're trying to push above here. Oil coming off its lows, barely. It's down 7%, so you can't talk about a 1/4% gain as much. Wow. So Blair, Ron Paul, this is like if Matt could jump in right now and give a fun fact, but just so everyone is clear on my politics, I'm going to be very forthright right now. Ron Paul was running for the Republican nomination for the presidential election, and he's the only candidate that I've ever supported and contributed to. The only candidate I've ever supported and contributed to. We also got the U.S. plunge protection team in full force this Friday, trying to take the markets green. So we have Kudlow out of the White House saying that the Trump administration is looking to implement immediate fiscal assistance outside of the tax cuts planned right before the election. And now we have the Federal Reserve Governor Evans saying that the Fed is ready to provide support as needed. They're doing their best, this coordinated effort right now. But here's what's happening on the technicals, and this is the nearest resistance in the market. Price right now still holding this resistance. Market stronger than all the jawboning. We'll see what happens, whether or not we get rejected off here or we're able to trade above. Today we got such a busy weekend. I'm gonna have to actually definitely get done ahead of time the weekly Forex forecast. Definitely by tonight. We got baptism. We have a family get together. It's gonna be quite a busy weekend. And then my wife is traveling early on Monday with her mom. Unfortunate. Please keep her mom in your prayers. Um, so I'll be with the 5 kids, but it's a busy weekend. It's an extraordinarily busy weekend coming up. But I feel like the last 2 days I've gotten the opportunity to watch two really good videos. Where one was a podcast, the one I shared of Raul Paul on Off the Chain, Anthony Papalono. I got to watch an amazing video on impact theory last night. Glad you just reminded me on leadership. It was phenomenal. and the guy who was the speaker, he's an elder guy, but at the age of 28, he ran the 10th largest church in the United States, and now is on the Hall of Fame. He on Amazon for authors. He's written over 100 books on leadership, and it was a phenomenal interview. I only watched about half of it, and I wanted to watch it even again. It was so good. And then the other thing that I started watching or listening to was like a treat for me to get so much of the stuff that I enjoy was Tim Ferriss last night talking about mildly talking about the coronavirus, but talking to this guy that I never heard of before and his way of thinking. So great. I wanted to share all of it with you. So much good stuff, but it's going to be a busy weekend. All right. The S&P is definitely having not an easy time bursting through there on this first attempt, coming in towards the London close. See what happens. Yeah, I admire so much his analytical approach and his thought process. It's amazing. I just love learning from other people. People always talk about how important it is to have mentors, and the internet's amazing because it gives us the opportunity to associate with all these people that we normally wouldn't have the opportunity to, and to take in all this information. Tim is amazing. Yeah, Sunset, did you read the 4 Hour Work Week? I never read it. Um, but I probably should. Is there anything else that you recommend? Tools of Titan. Bookmarked. All right, everyone. I think this is a great place to wrap up our Friday live stream. It's been a great week. I definitely have to say that I enjoy after this week, you guys all that much more. So I thank you for that. I hope you all have a great weekend, and I definitely I'm going to put a lot of work into this week's weekly Forex forecast. Hope it's a help for you. It's something that is a huge asset for me. Kind of just rebalancing going into the week ahead. Crude is now down 8.3%. 8.3%. Wow. Jesse. Jesse's got some sick emoji gameplay. That was awesome. All right, everyone. Stay safe, and I'll talk to you soon.